Okay, hello and welcome everyone. Now in today's class, we're going to attempt a question of Mar-Jun 2023. That's our company. I'm reading the question for you. It is 1st July. You are an audit supervisor of our company. That means our company is the audit firm, right? You're an audit supervisor of all companies audit firm, responsible for final audit of Heron company. Heron is the client, which is due to come in shortly. Heron is a manufacturer of colored dyes used in textile industry. Draft financial statement source assets of 65.4 and profit before tax of 8.9. Following matters have been brought to your attention. Additions to plant and equipment. Heron incurred significant capital expenditure in there as it purchased new manufacturing line. So significant capital expenditure. All costs incurred in the purchase and installation of manufacturing line have been recognized as planted equipment with non-current assets. The amount capitalized of 3.6 million include purchase price of 2.7 million, delivery and installation cost of 0.3 million, purchase tax of 0.5 million, and 0.1 million incurred in training staff on how to operate the plant equipment. So they have purchased, they have made a capital expenditure. All costs incurred have been recognized as assets. Capitalized costs, asset cost, capitalized means they have incurred it as a capital expenditure, included as assets. 3.6 million, including purchase price 2.7, delivery cost 0.3, refundable tax of 0.5, 0.1 million in training. In addition to the 3.6 million capitalized, Heron incurred costs of 0.2 million testing the quality of dye being produced by new manufacturing line. Finance director has also capitalized this cost with plant and equipment. So testing cost of 0.2 have also been included as plant and equipment. Heron started using the new manufacturing line in December 2004, and it has a useful life of 8 years. You used that, started using them in December 2004. And life is 8 years. So year end is 31st May 2005, and you started using it in 2004 before year end. Bank balance. Bank figure included in Heron's financial statements comprises 4 bank account balances, overdraft of 2.4 million, which is company's main current account, and 0.6 million relating to 3 savings account. Finance director has informed the audit team that all 4 accounts have been reconciled as at year end. Okay, so bank figure has a draft statement comprising 4 account balances, overdraft 2.4 million, main account 0.6 million, 3 savings account, and reconciliation has been done. Then there is a provision. Parrot company, a customer of Heron, has made a claim of 0.8 million against the company. Parrot is claiming that a customized yellow dye purchased from Heron in March 2005 was substandard, and that as a result, Parrot has had to scrap a large part of clothes it was producing. Finance director has included a provision of 0.6 million in draft financial statements for the year ended 31st May 2005. As she believes that this is the likely to be sum to be paid to settle the claim. The yellow dye was not sold to any other customer, and Heron does not hold any inventory of dye. So to one customer, Heron sold dye, which was substandard, and they filed a claim against us. We have included 0.6 million in draft financial statements. Okay. That's it for the question. Describe substantive procedures auditors should perform to obtain sufficient appropriate audit evidence in relation to matters identified regarding additions of plant and equipment. Okay, so you need to write substantive procedures with respect to additions. Okay, now first go in our substantive notes file. Substantive procedures for additions, we will write them. Okay, and certain we will write the things from the scenario, company name, amounts, to ensure we are linking it as well. Okay, so the first procedure is select a sample of additions and agree cost to supplier invoice. Okay, select the sample of additions and agree cost to supplier invoice. Now, people might say that this is just copy paste. Okay, this is going to earn 0.5 marks. So just make it relevant to the scenario by writing something about the scenario or the company. Okay, how will they do it? Now, the second one, I'm just linking them shortly. Obtain a breakdown of additions, cast the list, and agree all additions included in NCA register. Cast the list and agree all additions added in NCA register. Good. Now, obviously, people want to link it to the scenario, but scenario linking isn't tough at all. You just need to mention the amount or company name or supplier name or customer name from the scenario to make it. Okay. Now, the general procedure is select a sample of additions. Okay. Here, there are no sample of additions. There is just one addition. Okay. Here on incurred significant expenditure in there as it purchased a new manufacturing line. There was just one, not multiple. All costs incurred have been recognized as plant and equipment with a non-current asset amount capitalized of 3.6 million, includes purchase price of 2.7 million, delivery cost of 0.3, blah, blah, blah. So there are no sample of additions, there's just one additions. So for a sample of additions or for additions of $2.7 million, you purchase it for 2.7 million. Agree cost to the suppliers invoice. Okay, for addition of 2.7 million, agree cost or agree purchase price as present in this to suppliers invoice. Okay, you mentioned something from the scenario. This has been linked. Second, obtain breakdown of additions. Okay, what is the breakdown? Cast the list and agree all additions added in NCA register of here on. You mentioned something from the scenario. So obtain breakdown of additions of new manufacturing line because it was talking about manufacturing line. So you see, we just have to show that we are talking with respect to the scenario. Review board minutes to ensure purchase authorized by board. Just make it close to the scenario. Purchase of new manufacturing line has been authorized. Board of directors of here on. So you see, you just have to carefully address the issue to just guide that we are. Okay, so I was saying that we just need to mention that we are not just copying the points, we are specifically talking about this thing. So people think usually that scenario linking is very difficult. Actually, it's not the case like that. Okay, now from my list, you have written the 3 additions. Okay, now what to do further to, because I have only stated you 5. Just use a bit of mindset. Additions to plant and equipment is capital expenditure. Capital expenditure is purchase of asset. Okay, additions is basically capital expenditure. So capital expenditure is basically purchase of asset. Okay, so you can write 2 from the purchase of asset here, purchase of asset. So basically purchase of additions is basically capital expenditure. It's written clearly in the scenario that additions is capital expenditure. Capital expenditure means purchase of non-current assets. So you can write 2 from non-current assets. Okay. Recalculate depreciation expense from the year. For the year, you can write this. Recalculate depreciation expense for the year to ensure accuracy or calculations are correct. See this one. Recalculate depreciation expense for the year to ensure calculations are correct. And one last. Carry out physical inspection of fixed assets. Okay, now if you write carry out physical inspection of fixed asset to confirm existence. This is a general point. Okay, we didn't purchase fixed asset. It was mentioned we purchased a new line. So carry out physical inspection of new manufacturing line to confirm existence. So see how we did write the points from the notes, but related it to the scenario. This is just an easy job which you must be aware of. Okay, please copy. I will then move to the next parts. Next part, 5 marks, describe substantive procedures auditors perform to obtain sufficient appropriate audit evidence in relation to bank balances. Okay, now bank balances. Okay, so 5 procedures for bank balances. I should go in my notes file. Obtain company's bank reconciliation check additions to assure arithmetic accuracy, obtain bank confirmation. So first write it. Obtain company's bank reconciliation check additions to ensure arithmetic accuracy. Obtain bank confirmation letter from bankers. Verify balance as per bank statement to original year-end bank statement and also bank confirmation letter. Examine bank confirmation letter for details of any security provided by the company. Review cash book and bank statement for any unusual items. Okay. Now we just need to link it to the scenario. The bank figure included in Heron's draft statement comprises 4 bank balances, overdraft of 2.4, which is company's main account, total of 0.6 million relating to 3 savings account. Finance director has informed the audit team all 4 accounts have been reconciled. Okay, so just mention regarding the scenario. Opt-in companies. So companies, Heron companies, bank reconciliation and check additions to ensure arithmetic accuracy. Obtain bank confirmation letter from bankers. So there are 4 banks, right? All 4 bankers. Okay. Of your own. Okay. Verify balance as per bank statement to original year-end bank statement and to bank confirmation letter. Verify balance as per bank statement. Here on company's balance as per bank statement to original year-end bank statement to bank confirmation letter. Or you can write verify balance as per bank statement to original year-end bank statement and to bank confirmation letter, or verify overdraft balance and current account balance. Overdraft balance, current account balance, because there are 2 balances mentioned, overdraft and current account as per bank statement. So verify balance, so verify overdraft and current account balance as per bank statement to original year-end bank statement and to bank confirmation letter. Examine bank confirmation letter for details of any security provided by Heron company. Okay. Review cash book and bank statement for any unusual items. Okay, so we just talked something about the scenario. That's it. Please copy this. Okay, let's move forward now. Describe substantive procedures auditors should perform to confirm sufficient appropriate audit evidence in relation to provision for legal claims. So now I have to talk about legal claim. Parrot, a customer of Heron, has made a claim of 0.8 million against company. Parrot is claiming that customized yellow dye purchased from Heron was substandard. As a result, Parrot had to set up a large batch of clothes. Finance director has included a provision of 0.6 million, as she believes this is likely to be the sum paid. We didn't sold this to any other customers. Okay. So for provision of legal claim, let's go in my notes for provisions. Provisions for lawsuits. Okay, we will write about the legal claims lawsuits. Okay, so first write them. The first one for provision, discuss with management nature of dispute to ensure full understanding of issues obtained and to assess whether obligation exists. I will relate them later. Okay. Obtain lawyer confirmation to obtain their views as to probability of claiming successful. Review board minutes to understand whether directors believe the claim to be successful. In written presentation from management confirming their view that the claim is unlikely to be successful and hence no provision is required. Confirming their view. Ensure adequate disclosure is made in financial statements as per applicable financial reporting framework. applicable financial reporting framework or provision as I-37. Now we just need to link it to the scenario. Okay. So discuss with management the nature of the dispute, to ensure full understanding of issues obtained and to assess whether obligation exists. They have written an obligation of 0.6 million. Okay, whether obligation exists. Okay. Customize the issues obtained and to assess whether obligation exists. Opt-in lawyer confirmation to obtain views as to probability of claim being successful. Okay. Review board minutes to understand whether directors of Heron believe the claim to be successful or not. Okay. Ensure adequate disclosure is made in financial statement as per I-37. Now, see it point number 4. Obtain written representation from management confirming their view that claim is unlikely to be successful and hence no provision required. Now, look at a disadvantage of just rote learning and not reading the scenario. Okay. Obtain written representation from management confirming their view. Till here, it's fine. That claim is unlikely to be successful and hence no provision is required. If you write this is completely wrong, because according to management, their view is not that the claim is unlikely to be successful. They think that we need to pay 0.6 million. They believe this will be likely the sum to settle the claim. So if you write obtain written representation from management confirming their view that the claim is unlikely to be successful, they haven't said that the claim is unlikely to be successful and no provision is required. They have included in their financial statements a provision of 0.6 because they think they have to pay this. If in a scenario it's mentioned that directors believe that claim is unlikely to be successful and no provision is required, then you should write this, that confirming their view that claim is unlikely to be successful and no provision is required. But here they think that provision of 0.6 million is required. That's why they've included, because they believe that the claim will be successful. So obtain written representation from management confirming their view that the claim is likely to be successful and hence provision of $0.6 million is required, right? Because if in the data it's given that the directors, in many questions it's written like this, that the directors believe that there is no need to provision requirement because claim is unlikely to be successful. So if it's written that directors are saying no provision is required, then you write that point, that directors' belief is that no provision is required because claim is unlikely to be successful. But if they say that the claim is likely to be successful and they need to pay 0.6 million provision, so obtain written representation confirming that provision of 0.6 million is required. Okay, please copy this. Okay, last requirement, 5 marks, which will end the question. It is now 28th August 2005, and audit team of audit of Haran is almost complete. Auditor's report is due to be signed shortly. So year end was 31st May, right? It says it is now 28th August. Year end has passed. Audit report is to be signed shortly. On 14 July, that means 31st May was year end. After the year end, 14 July, Sparrow, a customer of Haran with a receivables balance of 699,000 at 31st May notified Haran that it was experiencing significant cash flow difficulties, would be unable to make payments for the foreseeable future. Finance director believes that as Sparrow is a long-standing customer and has been trading for many years, the outstanding amount will be received in due course and has therefore not adjusted the receivable balance in the financial statements. Okay. So it is 28th August, audit report is about to be signed shortly. And year end was 31st May. So on 14 July, after the year end, it's a subsequent event. Okay. A customer with a receivable balance of 690,000 saying that we are experiencing cash flow problems, won't be able to pay. But director is saying that since it's an old customer, the balance is fully recoverable. So it's a subsequent event question. Explain whether FS require amendment, then audit procedures. Usually it asks for impact on audit report, but that's not asked. But it had asked for first two things which you have studied in the class and subsequent events, whether FS require amendment and audit procedure. So remember, there was a 5-step strategy I told you. First, discuss the issue. Opening paragraph, introductory paragraph. Okay, so an introductory paragraph you can write. On 14 July 2005, a customer Sparrow company having receivable balance of $692,000 notified that it was experiencing cash flow difficulties and would be unable to make any payments for foreseeable future. Okay. So on 14 July, Sparrow, who is a customer of Heron with a receivables balance of 692,000 at 31st May, has notified us that we are experiencing cash flow difficulties. We won't be able to make any payments for the foreseeable future. And the finance director saying that he's a very old customer, so we will receive this amount. He has not adjusted this balance. So it's a question that whether FS need amendment, then audit procedures, then usually it's an impact on audit report, which hasn't been asked. So I told you a strategy that first write case intro. So why I've written the case intro. Okay. Then remember, under IAS 10, receivable balance being difficult to pay. So receivable balance existed in the balance sheet. Okay. So this will be receivables. If it's in balance sheet, they can anytime go back. So this is an adjusting event as it provides evidence of conditions that existed at balance sheet date. Hence, this receivable balance $692,000 needs to be adjusted in financial statements. Then you know following Audit procedures. Remember, following audit procedure will be performed. I told you discuss with management, inspect supporting documents, take expert advice or legal advice. So you can write in those. Discuss with management. What? Anything mentioned? Why they have not adjusted the receivable balance in financial statements. Inspect supporting documentation like invoice, correspondence from customer regarding likelihood of payment. Okay, you were required, take expert legal advice. You can write this as well. Now here this question has ended because you were only asked this whether FST's amendment and audit procedures. Had it been asked the third requirement, impact on audit report if the issue remains unresolved, then I told you case intro under IS 10, audit procedures, then materiality. So then you would write, it's not necessary to write, but then in case its impact on audit report is asked, so we would write the matter is 692,000 is your profit, sorry, issue. And what was your profit? 8,900,000 was your profit. The matter is material, but not pervasive, as it represents 7.8% of profit. Hence, a qualified opinion will be issued. Okay, then basis for qualified opinion para will need to be added, explaining a reason for qualification. The para will be stating except for, I'm sorry, except for the possible impact of this FS gives into inferable. So these last two things were not required, but just to explain you, I have mentioned it complete. Okay, you can copy and leave. This ends our question. Thank you.